It does seem as if there are some risk-positive stories at the margin then. You can look at the 899 news from the United States as an example of that. And even some of the weakness in the data out of the United States has been fed through into the lower rates narrative. So I suppose from that perspective, the push higher in stocks makes sense. Is there too much complacency, though, in your view?
I'm struggling with this market at the moment. Every input would seem bullish at the margin. As you say, yields are much lower, and it's not just because of softer data, but it's also because we're putting pressure on easier monetary policy from the US administration that is feeding through to Fed officials who are clearly feeling that and advocating for cuts at the front end. So we've got easier rates. We've got a massive fiscal tailwind globally. Of course, NATO has promised immense levels of spending over the next 10 years out of Europe. We're expecting the big, beautiful bill out of the US. We've got China spending, so a global fiscal tailwind. The trade promises this week out of the US have generally been promising. We've been told that US and China have got further along in terms of their agreement. We're told 10 more deals are coming soon. We've got a weaker dollar. We've got better geopolitics. We've got the removal of the 899 threat. We've got the SLR adjustment. Literally, it's just been an immense wall of bullish factors. And yet the S&P 500 is really, really struggling to make that marginal nudge higher to get close at a record high again, despite being so close all week. And it's the price action's kind of worrying me. I love bull markets that climb the wall of worry. I love when everyone's panicked out there and yet the market inputs are good. That was the scenarios you had last year, which is why I was bullish most of last year. Right now, it feels like we're getting stuck on the escalator of promise. We're failing to go higher despite all the inputs being good.
The escalator of promise. I like that phrase, Mark. But let's, I guess, maybe tamper the excitement. What are some negative risks on the horizon?
Well, I think that given the kind of optimism and promises out there and the kind of communication we've had from officials around the world, I think we're really teed up for disappointment. So I think trade, the US keeps on saying we're going to get 10 deals any moment soon, and that US-China continues to finalize the confirmation of the agreement that they'd previously made. But so therefore, I think the trade might be disappointing with that deadline approaching. I think the big, beautiful bill is going to struggle to get passed by next week on that arbitrary set deadline. So there's disappointment there. I think we all know that NATO defense spending is probably promises that won't be fulfilled. But I think also it's a story that's going to take a long time to kind of run through. And I think that with yields having fallen so far from here, I think there's risk that we might get more concerned on yields on the upside from now. We've played the disinflationary theme. And I'm not saying that yields have bottomed out yet. I have no particular catalyst or reason for them to suddenly jump next week. But if I had to say where the next big move in yields is, it's likely to be yields higher, particularly at the long end, as we continue to have growing fiscal concerns and as inflation comes back on the radar with the increased costs of global trade due to US tariffs.